Hey everybody, it's Eric. Today is September 9th, 2016. I wanted to do a quick video explaining how it works if you are a US investor or an international investor that is buying Canadian stocks via the US OTC or pink sheets, or also what's called the gray sheets. There's basically a few different components. The gray sheets, we'll just call them the pink sheets for the sake of this discussion. But I find that people are very confused about how this all works. And it took me a while. I'm realizing what's second nature to me may be very new to a lot of you. And I think this is valuable information considering that a lot of stocks that we invest in are Canadian because they're in the gold and precious metals market. But it's not as easy for us to buy Canadian stocks directly on their exchange. Some online brokers allow that, which is great, but you still have to take the conversion into play, which is the US dollar versus the Canadian dollar. I'm going to use the US dollar to the Canadian dollar, but if you're listening from London or you're in Europe, you're just going to have to use the analogy of euro to Canadian dollar or whatever your currency is. And then we can do the math from there. But what's important to remember, and I'm going to use 1 to 1.3 ratio, which is, last I checked, I don't know if it's current, but recently that's what the US to Canadian dollar was. The US dollar has more purchasing power than the Canadian dollar. So it takes 1.3 Canadian dollars to buy 1 US dollar. The most important thing I can describe in terms of how this works, mechanically, is these US symbols for the Canadian stocks a lot of them are really easily created. In fact, I've heard stories where you will have a US investor who wants to buy like 10 grand worth of a Canadian company and there's no US component, and they'll just throw it up there. The firm, the market maker, to throw it up on the gray sheet. I don't believe there's any cost, and they just associate a ticker with it, and on you go. So a lot of those are not even done by the companies themselves. It absolutely is a process for the companies if they're going to get an OTC listing, OTC QB listing. Those actually trade on their own volition, and you'll see that they trade in concert with the ratio in Canada, meaning if the stock is at $1.30 in Canada, you'll see the OTC trading around $1. But if you're talking about the pink sheet component or the gray sheet component, what ends up happening, a lot of people will look at the trading volume and say that there's no volume here. And a lot of times that's true, but it actually doesn't even matter, because what matters is the Canadian volume. For example, let's say XYZ Corp at $1.30 a share is trading 100,000 shares a day. And in the US, it trades like 5,000. There's just like not much going on. In fact, let's use 1 million shares a day in Canada and like 20,000 shares in the US, because we'll see that sometimes. There's just not a lot of volume that trades on that actual security. However, what happens though is when a US buyer wants to buy that stock, because it's not its own listing, there's not necessarily more than one market maker that is there on that security. So what do? The broker then funnels that volume to Canada to buy or sell the security. So you actually will see, let's just say you put in an order at $1.05 to make sure that you hit the offer in Canada at $1.30, and you do it for 10,000 shares. If it's an OTC QB or QX listed stock, you may not see the volume go up there. But if it's a pink sheet or a gray sheet, which is most common with the penny stocks, you can refresh once you're filled, go to whatever you use, whether it's stockwatch, which is what I use for my real-time Canadian quotes, and you refresh the screen after you're filled, you mostly will see it hit in Canada too. So that's how it trades. In normal securities, there's market makers that have an inventory, and if you put in a limit order, they'll sell it to you if it's a price that's right in the middle of the bid and the offer, or certainly at the offer you can get it. With these pink sheets, there's really, you got to do the math. You have to realize that never ever put in a market order. And that really goes for almost anything except for really liquid listed securities that you just want to buy, or ETFs that are running and you just put in a market because you want to get it done. That's fine. But it's really good best practices just to always put in a limit. A lot of these online firms won't even let you put in a market order on a penny stock, which is good because they're so thinly traded. Sometimes it can just fly up. They'll give it to you at really high prices and then it comes right back down. So you want to avoid that. But when you're figuring out where to buy, let me give you an example that probably is more valuable, which is, let's use a 13-cent stock in Canada and a 10-cent equivalent in the US. There's not one coming to mind, but let's use XYZ Corp. And so what you have to keep in mind is if it's trading at, let's say, 12 by 13 cents in Canada, and it's not trading a lot of volume, you can actually see how much is available if you use a stock watch to see how many shares are actually there. If you see that there's, say, 56,000 shares on the offer and 20,000 shares on the bid, and you want the stock, this is how I usually do this stuff with a new pick. If it's a new pick for me and the stock is within the realm of where I want to buy it, although maybe it's gone up a bit recently and I don't want to chase it, but I do want a position because I think it's going to work out long term. Usually that's where I'll buy half of what I want or a third of what I want right away. And I do that in these cases I hit the offer. I don't screw around, because unless you're playing with just a couple grand or something, and even if you are, who cares? You're talking about pennies. And if you're worried about pennies, you're never going to make dollars. I mean, in terms of some of these particular situations, because a lot of times if we're buying a 13-cent Canadian junior, we're looking for 50 cents, a buck, big upside if it's going to work out. If it's not going to work out, it can go to zero. So if that's got that type of potential and you're worried about saving a few bucks, you miss these situations a lot of times. So I just want you to keep that in mind. But let's say, for example, I was looking to buy a full position of 100,000 shares, so I start off with 50. So there's 56,000 available at 13. I can see that in the Canadian XYZ Corp. So I'm using my broker, which is XYZZF, which is the foreign equivalent, the US equivalent pink sheet that doesn't trade much. XYZ, let's say that thing trades like 500,000 shares a day. XYZZF trades maybe 30,000 a day. So I'm looking to buy more than the average daily volume. That will deter a lot of people, and they'll say, well, it's just too illiquid for me. But you don't look at the US volume, you look at the Canadian volume. That's 10% of the daily volume, which in these situations for me is really not a big deal. Sometimes I'm almost all of the volume. So I will go ahead and do the math, which is it's trading at 13 cents. So I know that it's going to take 10 cents to get that stock from a 1-to-1 equivalent of the 1 to 1.3 ratio, meaning a US dollar buys $1.30, or 10 US cents buys 13 cents Canadian. So you want to do that math. But in addition to that, what you have to keep in mind is that the online brokers typically, in most cases, will charge a half of a penny to buy these type of pink sheet securities. For example, Schwab, E-Trade's a little bit more, but Schwab, for example, was always the 0.005, which if you're buying like a 2 to 3 cent stock, is huge. I mean, you're talking about on a 2-cent stock, that's a 25% markup on that stock. So you have to realize, like, if I really want this and I'm going to buy it, I got to make up 25% to even break even. And it's something you have to keep in mind. When it's up on the 10 cent or more, it's more manageable. You're talking about 5% on a 10-cent stock with a half a penny. You also have to include, there's commission, probably $10 or whatever it is on the security. But in the case of the XYZZF, if I want the 50,000 shares and I want to take that offer out in Canada, I'm going to put my limit in at like 10.5 minimum, and probably I usually put it in at like 10.7, just to make sure that if I'm missing a little bit of their conversion, because sometimes these firms don't really give us the best conversion, they'll give it close. So I want to make sure that I'm going to get it. So I'll do it at 0.107. That includes the half of a cent that they're going to charge me and the conversion on top of that. So sometimes I'll even go 11 because the broker will typically then give you the price that they're going to get. So you could end up putting in 11 and then it comes back at 0.1065 or 0.106 or 0.1075, something like that. You still can get filled lower than you put the limit at, depending on the brokerage firm that you're using, okay? So these are all the same on the buy side and the sell side. So if you're going to take profits on a deal, you have to keep that equation in mind as well as the half a penny. But I just wanted to walk through this briefly today because I think that it's confusing for a lot of people, but it's actually not. You need a calculator in some cases if you really just want to do it appropriately. My suggestion is, like, if you're going to sit on the bid, if you say you've already got a position in XYZ and it's at 12 by 13, and you kind of think like, okay, the bid's weak at 12, the market's weak, I could probably get some like at 12 cents. So what do you do then? In that case, what I do is I will put in a bid. Basically, if I know that 0.105 or 0.105 should get it at 13, I'm going to put it in at 0.095 to 97, and then I'll watch and see if it shows up there, if I'm being represented. If I didn't go up high enough, you're not going to see it on the bid. You're not going to see it arrive on the bid in Canada. And with this, what I suggest, people use all different types of systems. I use the real-time stockwatch.com service. It's good. You can get a lot of in-depth stuff, or you can just get the real-time, TSXV and NASDAQ, and depending on what's important to you. I have market depth on OTC stocks. But you can use a delayed quote system too, but you got to wait 15 minutes to see if your order showed up, which, it's fine if you're not really a very active investor, but if you're active, you should just buck up and get the real-time quotes. But in that case, what I'll do is I'll throw it in at, let's call it 0.1. And then I should show up at 12. Maybe I even show up at 12 and a half. If it's at 12 and a half, but I want it at 12, I go back in and I change the limit to 0.097 or 0.6 and see if it's represented. You got to play around with it a little bit sometimes if you're doing it via the US market to the Canadian market. The important point is that what counts on these is the Canadian volume. We're buying a Canadian stock, we're selling a Canadian stock, we're just doing it through a US vehicle that sometimes isn't used as much, but tends to have as much liquidity as the Canadian component. That's what's appropriate. Don't be deterred by the fact that if, we had this with like Zenyatta, ZNYF. They are now their own US OTC QB, but for the longest time, we had to do this exact thing when the stock was like 20 cents ZEN and all the way up, and it went to $5. And so, you have to know how to work this stuff, because people will put in limits at all kinds of wacky prices. Now, when you have an OTC listing on the US, then you'll see a bid and an offer price. It's the pink sheet and the gray sheet that does not give you the bid and the offer. You just have to not guess, but you have to calculate where they're going to fill you based on what I just walked through. Now, if it's an OTC component on XYZ Corp, let's just say, for example, 12 by 13 cents, chances are in the US, it's going to be 9 by 10 or so, you know, like point, and it can change because let's say it's 9.10, and then Mashinsky comes in and says, I'm going to put a bid in at 0.092, it's going to show up there. It's not an exact science. There's a little bit of an art to it, although these are numbers, so there's not that much uncertainty with it, but you have to play with it in that sense. So, and again, like on the fractions of the penny, this stuff's important because even like, for example, a penny on a 10-cent stock is 10%, which is a big percentage. On the other hand, you have to look at what's my goal here and what's the upside, and do I want to jerk around for a half a penny to save a half a penny if I think this thing's going to go 50 cents higher. So that's why, you know, a lot of times I'll encourage people, don't mess around, at least for your initial position. If there's a stock pick you like that I come out with that's sort of one of these thinly traded deals, buy half, buy a quarter of it. Just get some on the books right away, and do that by taking out the offer if there's some shares there. And or, you know, a lot of times if I, like with 12 by 13, if there was 56,000 shares there and I wanted to buy 100,000 shares, I'll just start off by, I'll take 13 out to 56, and then there'll be 44,000 shares sitting on the bid at 13, and I'll wait there for a little bit and see if I get hit that day. And sometimes you do, sometimes you don't. It depends on the market environment, etc. But in any event, I just wanted to go through this today with you guys. I hope it was helpful. A lot of times people get really confused. You know, when we invest in private placements, for example, we're doing this GUG, which is trading at 3 by 3.5 cents on GUG. And I have a subscriber who just, you know, said, this is, why are we doing this? Is it just for the warrant? Because it's trading cheaper than 3 cents. And I said, you're looking at ASWRF, you know, that's the US component. So it's going to be trading 25, 30% cheaper than where it's trading. And plus, you can't really rely on something like, you know, this is one more really important thing. If you have like with ASWRF, which is the GUG component, that thing can be like 2.5 by 3.5 cents. And, you know, if somebody sells 5,000 shares at 0.2.5 and it closed at 3 the day before, let's say somebody sold it at 2, it closed at 3, and you email me and say, this stock is down 30% today, what's going on? I ignore it, because look at the volume. It doesn't mean anything. You could paint it up with $10 if you want and show that it's up, you know, 20% for the day. It's totally ridiculous in terms of any meaning whatsoever. There's got to be volume there, and you want to pay attention to, if there's no volume and you see it's up a huge amount or down a huge amount, you have to pay attention to these things because it's useless. You know, we used to have with, I still do with Jaegercorp. I have one account with millions of shares in it, and I'll walk in one morning and my account's down like, you know, 40 grand. And I'm like, what the hell's going on today? And it's just because somebody sold it on the US market at a low price, and it's already just down in the 2-3 cent mark. So it could be down like a penny, you know, or a half a penny on nothing because one guy with 10,000 shares wanted to sell it. So then I just say, whatever, it's nothing. It doesn't make any difference. You know, tomorrow it'll probably be up 40 or 50 grand. So those are just things to keep in mind when you're dealing with these US and Canadian penny stocks. If you have questions along this line of thinking and this type of a situation, feel free to shoot me an email and I'll address them. Thanks.